Welcome back, everyone, to NYU Grad's Daily Podcast. It is Wednesday, January 31st. This was Fed Rate Decision Day. Lots to cover, so let's jump right into this. So when you take a look at breadth today, we had 462 new highs versus 198 new lows. And when you take a look at advancing versus declining, we had 21% advancing versus 75% declining. On the 50-day moving average, we had 39% of shares under its 50 and 36% of shares under its 200-day moving average. Now, that doesn't really tell the whole picture here. The market, especially the Dow, was kind of just marking time going sideways. The Nasdaq and the S&P did the same, but they opened down for the day. To kind of give you an overview of how indices closed, we closed at the lows. The Dow was down 317 points, or 0.82%. The Nasdaq was down 345 points, or 2.23%, and the S&P 500 was down 1.6%. Looking across the Magnificent Seven, pretty much red all across the board here. Microsoft was down 2.69%, Nvidia down 2%, Google down 7.3%, Meta down 2.48%, Apple down 1.9%, Amazon down 2.39%. It was pretty much a bloodbath. There were a couple healthcare names like Lilly, UNH, J&J that were green. Boeing is bouncing here from just a deep sell-off. And then when you take a look at groups, everything was red. The least red was healthcare and utilities and consumer defensive. The most red were communication services, tech, energy, and consumer cyclical. That was the complexion of the day. Everyone was pretty much waiting for Jerome Powell and the Fed rate decision. He started to speak at like 2:30ish, and as soon as he started talking, the markets started to rally a little bit. And right around 2:45, when he was wrapping up going to Q&A, the markets started to sell off really hard. I'll share a screenshot of the ES action, the SPY futures. Not only did we lose the pop, we also kind of just continued to sell off through the day into the close as well. Something that showed up this morning that wasn't covered too much broadly was New York Community Bank. The ticker symbol is NYCB. So keep in mind that New York Community Bank was the bank that worked with the government to take over the collapsing Signature Bank. And this morning after earnings, they were down at the lowest point, down 40%. Basically, the bank announced that they were cutting their dividend by 70% to meet regulatory requirements, and they had to take a heavy $260 million loss on commercial real estate. So this could be the signs of the beginning of CRE contagion, so to speak. So keep a close eye on NYCB and just the KRE regional banking index for more troubled signs. What else did I want to cover for you all today? Something I wanted to also share with everyone. I was doing a comparison chart between Nvidia, the S&P, the Nasdaq, as well as the ETF SOXL, which is a 3x bullish on semiconductors. And what was curious to me was that Nvidia, if you're going to go long, was a safer way to play this position because during the downdraft of the summer into late October, NVIDIA did not go down as much as the time decay prone Sorell. And on the rally after November into the Santa Claus rally, NVIDIA went up just as much as Sorell. So I'll post a screenshot of this as well. Qualcomm after hours beat on their earnings. They're initially up 3.3% after hours, but then as soon as the conference call started, it kind of sold off, and now we're down 2% on the day. They posted really good numbers. They're partnering with basically Samsung for all of the S24 range. I actually just bought that phone to replace the Samsung 20. That was a missed opportunity by Apple. I thought the iPhone 15 was lackluster, but I was ready to switch if they could, offer some better technology. But maybe on the next one. But I won't be in the market for another 4 years for a phone. So that's just the way it goes. So keep watching yields, keep watching the Magnificent Seven with a hyper focus on NVIDIA. We do have more earnings, some big ones coming out on Thursday. After the close, you have Apple, Facebook/Meta, and Amazon all reporting Thursday. You have on Friday morning a very important economic data report on U.S. non-farm payrolls. In context, this payroll number and the unemployment rate coming out at 8:30 is with a backdrop of a more hawkish Fed rate announcement today. They didn't cut today. So, Friday, if the job numbers is really good, then I can potentially suspect that they will say that, oh no, the Fed has to stay higher for even longer. Or if the job numbers comes down and we're continuing to sell off until Friday after earnings of like Apple and Amazon and Meta, then I could see a bounce back if the jobs print is bad. Saying, oh, wow, look at that, Powell. The job numbers are horrible. The non-farm payroll numbers are horrible. And you have to also watch out for revisions because they've revised like 11 out of the 12 jobless claims in the last year. So those are things that I would watch out for in this coming week. Overall, this was a very bearish tape across the board. And also watch to see what happens with Qualcomm in the morning session because they reported pretty good numbers. I'll post a link to their slides, but maybe it was priced for perfection on earnings expectations. We'll see. I'll see you guys after the Thursday session. All right, later.